My name is Filip Vukovic, and I'm the head of transfer pricing with KPMG Lower Gulf and the Middle East South Asian practice. I will be hosting today's session, accompanied by my colleagues who I will introduce to the wider audience in a couple of minutes. Before we begin, the COVID-19 outbreak is still growing and continues to disrupt the lives of individuals, families, and communities around the world. We hope that during these hard times that yourself and those around you are keeping safe and well. As the international response to the pandemic continues to evolve worldwide, there have been some positive developments recently. Notably, just 2 days ago on the OPEC Plus front, where the largest oil producers in the world agreed to production cuts exceeding 10 million barrels starting as of May 2020, which including additional support and commitments by non-member states like US and Norway, Indonesia, and others, may reach up to 20 million barrel reduction. This should have a positive impact on the GCC region and on the world as a whole, and for me, more importantly, demonstrates that countries worldwide can come together and reach a consensus in a time of need. The purpose of today's webcast is to continue sharing the knowledge and insights that we have been accumulating over the last weeks from a tax perspective. And having finalized the first session, which was focused on imminent and immediate cash flows impacts that you're all facing, this session will be focused more on direct taxation, government responses, and the impact on the tax function. Now, things are moving so quickly worldwide, so we will try and focus to provide you a broader perspective on the latest developments in the GCC region over the next half hour. As always, please do reach out to your local KPMG contact and discuss the situation you are facing to find the best potential outcome for your organization. Next slide, please. I'm going to note that this is the second of the series of recorded 45 minutes webcast that KPMG Middle East is rolling out on a weekly basis. So stay connected for future releases. There will be a couple of more to come. Your feedback on the end of today's session is highly welcome, and your participation will help us improve in the future. Also, if you have missed last week's sessions, recordings are available online. If you have any technical questions, please do use the question mark button and a member of our team will reach out to you. You can also use the chat box in the player. Today, we have decided not to include polling questions, but as always, we have left some time for questions from the audience at the end of the session, and you may raise questions as we go along with the presentation using the questions chat box. Next slide, please. I'm joining you today from Dubai, United Arab Emirates, and I'm accompanied by my colleagues over the GCC region in order to provide you a broad regional perspective. With me today is Barbara, the head of tax of our KPMG practice in Qatar, Anush Kapoor, which is an international and M&A tax partner in the UAE office, and Mohammed Araji, financial services tax partner with the Kingdom of Saudi Arabia. Next slide, please. So covering the administrative parts, let's go through today's presentation. Now, we're going to kick off with an overview and a discussion on taxes from a federal budget perspective and what are the responses that we're seeing over the GCC region. Then we're going to touch base to understand how this impacts the tax function. What are the how do we manage tax authority risk going forward? And then we're going to leave time for the Q&A session. Now, we took your feedback from the last session, and we're trying to make this into as much as interactive as possible. So I do strongly encourage you to ask and pose questions as we go along, and we will address them at the end of today's session. Next slide, please. Now, before we do a deep dive, I would like to continue with some positive news. Although the pandemic is still ongoing, we have a number of hard-hit countries like Spain and Italy that are seeing signs of slowing down. Others, like some countries in North Europe, are already contemplating the gradual easing of restrictions. Scientists are rushing like never before to come up with solutions that will bring an end to the virus, and currently 10 different therapeutic agents are in active trials, while another potential 15 treatments are working toward clinical trials. So hope exists that we will be returning to the normal soon. Well, it's not going to be exactly normal, but the new normal that I have been mentioning in the previous session. This new normal will have many perspectives and a number of consequences to us all. Like we as individuals or corporates are impacted by these circumstances and will have to adapt to this new normal, governments and their respective budgets will also have to adapt, which may bring a number of considerations. Now, Anush, I would like you to give us an overview of what the past looked like on a federal budget perspective and how it's going to impact the future for business operating in the UAE.
Thanks, Philip, and thank you everyone for investing your time with us today. Now, with an attempt to put taxes in the right context of today's discussion, I thought it would be quite worthwhile to have a quick peek into a little bit back in time since 2018. So what we can see on the graph on the left-hand side of the slide is if we see from 2018 till about this year, 2020, we see a significant increasing trend of taxes as a line item of the revenue side of the federal budget, increasingly contributing approximately 20% per annum to the overall revenue target. So much so that as per the 2020 budget, if we put together the tax and non-tax revenue sources, non-tax being the fee-based revenue which UAE as a federal makes, collectively they almost contribute 90% of the total budgeted revenue. Now, it is given that any crisis of this magnitude has the capability of disrupting federal budgets, taking the economists back to the drawing board. However, one would tend to think that the underlying economic assumptions would still make it a compelling case for taxes to continue to be highly relevant, on high agenda and a popular agenda on the government's mandate. And accordingly so even for businesses, more so with the growing oil prices and the consumption-based revenue sources seeing a downtrend, taxes would still tend to be at a center stage of any fiscal move we expect for the countries to take.
Thanks, Anush. Barbara, can you give us an overview of what's happening in Qatar and what's Qatari perspective on all of this?
To everybody, yes, more than happy. As you all might know, tax revenue is not yet a major factor in the budget of Qatar. However, it's much more the international tax development, BEPS initiatives, which is driving the tax agenda in Qatar. Qatar is extremely keen to stay off of all the black and gray lists of this world. And so far, they have actually been quite successful in doing that. In this context, we have seen a lot of changes in this year, in this calendar year mainly, and a lot of these changes have an impact also on the entire GCC region. One of it is that Qatar has introduced new withholding tax rules, leading to a situation that almost all services acquired from non-Qatari entities are now subject to a 5% withholding tax. Then the available tax exemption for corporate income taxes has been reduced substantially. One of the examples is that fully GCC-owned companies are only tax exempt to the extent that the GCC owner is resident in Qatar, which will often not be the case. And also there were a lot of changes affecting subsidiaries of listed entities and indirectly Qatari-owned companies. So Qatar is really keen in showing the world that Qatar has taxes and is also enforcing those taxes. Another point is that Qatar is about to introduce a full-fledged transfer pricing system. So we expect the guideline to be published very soon. And also we have seen before now the crisis came, we have seen a much increased activity of the GTA. So they have started to do assessments, audits have kicked off. So it's a completely different world now than it has been a couple of years ago.
Thanks a lot, Barbara. And now I know that KSA has also prepared something, and I know that the non-oil revenue in KSA constitutes almost 40% of the overall budget for the country. Mohammed, would you kind of give us a drive-through on how this looks like?
Thanks, Philip, and thanks everybody for attending. And rightfully so, Philip, in line with the Vision 2030 of the Kingdom, of the Kingdom's Vision 2030, growing non-oil revenue is a top priority. And in the 2020 budget, as you can see on the chart, the non-oil revenue is 38%, totaling to an amount of 320 billion riyals, out of which 60% is from tax revenue, all tax revenue. And if you can see in the dark purple sector of the beanbag, you will see that tax on goods and services total 44.4%, which is a substantial amount of tax revenue. So in line with what Anuj mentioned and Barbara, tax is becoming more and more important and part of the budgets for governments to balance their budget.
Thank you very much, Mohammed. Now, could we perhaps move on and to see, we know that taxes are an important piece, but what are the kind of responses that we observe in the UAE, Anuj, in terms of tax easing and tax regulations?
Right. So I'm conscious that we did touch upon some of the fiscal measures adopted by UAE as part of the largest stimulus package in our first webcast with our audience. And we do continue to see a similar flavor coming through in terms of progressive decision making by the ministries. As a matter of fact, tax authorities are very much operational, while they have snoozed some of the compliance due dates and accordingly the tax payouts. This does come across as a responsible action, very comparable to similar initiatives and steps taken by many maturer jurisdictions. Of course, adoption of technology, as we all know, which has been a progressive mandate taken up by tax authorities across the GCC, will surely act as a catalyst in driving some of these decisions. In parallel, I find it important to note that the commitments at the OECD level on the BEPS mandates is very much high on agenda. This can also be inferred upon by various announcements coming from some of the free trade zones on economic substance compliance due dates. Yes, we all are conscious this is the first year where these new regulations are being soft landed into the UAE, and hence these measures are of great significance to all the businesses. Now, all in all, if you imagine the tax authorities as a counterparty to your taxable transactions, then it appears that they have acted upon with a touch of agility. These are mature responses, no knee-jerk reactions. They have leveraged on the data analytic capabilities, which they have gathered the data in the previous years or so. And these are pretty measurable steps to temporarily ease the fiscal compliance pressures as well as some liquidity pressures on the businesses.
Thanks
At
a
the
lot,
same
Anuj.
time, just to complete the thought there is a conscious effort to continuously assessing the situation. For example, just about last afternoon, we saw the excise compliances also being given a longer rope. And depending upon how the events unfold in days and weeks to come, one would expect similar decisions being assessed, announced, and implemented.
Thanks, Anuj. Barbara, what's the kind of overview for Qatar?
I think it's interesting to note that Qatar was probably one of the first movers. So they announced very, very early that the deadlines for corporate and payment dates actually for corporate income taxes 2019 will be extended. It's now already more than a month ago that this has been communicated. But then it more or less stopped. So the withholding tax deadlines have not been extended. One will be tomorrow. And also, other reporting deadlines, we have not yet heard any communication. There is an exemption for customs, which is mainly for food and medical items, but I think it's not something I would like to cover in more depth here. But it's very remarkable that the tax authorities actually, they remained quite operational. So they had to, I think, organize even laptops. They are working mainly partly from home, but they are reachable. they react, and they have switched quite fast to an online communication. So it's more or less the same observation than in UAE.
So it's applicable as us all, the tax authorities in Qatar work from home.
Yeah.
Thanks a lot, Barbara. Mohammed, I know that there has been some significant relief measures that were announced in KSA that you wanted to touch base.
Yep, similar to many countries deferring and pushing the filing and payment deadlines to 60 days, 90 days, depending on the country. Gazette, the tax authority in the kingdom, introduced an amnesty program. And this amnesty program gave a huge relief to the taxpayers for a period of almost 3 months. So between now and June 30th, taxpayers will have the benefit or the option to amend tax returns if they think there's anything to be fixed in their tax return, and there won't be any penalties for correcting or amending those returns. If they are late on their installments, and there's a mandate in Saudi, if your tax bill is above a certain threshold, that you have to make 3 tax installments per year. And if you're late on those installments, there's a penalty. So now, if you're late on one, that penalty is waived. Sometimes Gazette would charge penalties for being non-cooperative with a tax audit. So now, given the circumstances and the difficulties in getting access to information, those penalties have been waived. If you are supposed to register or you have the wrong registration and you want to fix your registration with the tax authority, normally that would impose a penalty. That penalty has been also waived. Another critical aspect of this amnesty, the suspension of freezing of the accounts, the online accounts, where everything in Saudi for tax filing happens online. So if you are your account is frozen and you're being charged fees, those suspensions has been lifted until June 30. Even further to make the life of taxpayers easier and to continue the economical cycle, Gazette will be granting zakat certificates without restrictions. They will be accepting installment payments for back taxes or new taxes without the request of down payment. And one critical issue, which normally used to take few months, Gazette said they will expedite substantially the processing of refund claims, and this was discussed in the first session on how this can help businesses sustain a healthy cash flow, especially from VAT and customs. So there are many measures, and I think these are good measures that will help the taxpayers relax a bit, spend enough time to prepare, visit their old year returns, and submit them without the fear of paying substantial penalties. Also, it's worth mentioning, Philip, that tomorrow, between 7 and 8 p.m. Saudi time, the tax authority will be hosting a WebEx, their own WebEx, to explain how the taxpayers can go online and submit all these amended returns or these adjustments without being penalized.
And I'm sure that there's going to be a newsletter following that KPMG Saudi Arabia will issue to everybody.
Yep.
Perfect. Now, if we go to the next slide, I'll just try to make a kind of summary that I hear, because we all know that corporates and businesses now have difficulties to operate due to the kind of lockdown that we're facing. Volume of businesses down, revenues are usually down. And what I heard from your stories is that tax is an increasing kind of component in GCC budgets. And I see here that the measures are only, except for KSA, which gives you the right to correct the past, but the other measures are more focused on delays, and kind of governments are still expecting that they might collect all the tax revenues that they planned. So what I see is a kind of a big impact on the tax function. And I would like my guests to discuss a little bit on how do they feel that this is going to impact professionals which are working in a corporate.
So there are the traditional CFO expectations from the finance and the tax functions. CFOs expect that the finance and tax functions will close the period, prepare the management reporting, prepare disclosures to the government, prepare tax returns, and submit those. And with the COVID-19, these expectations were severely challenged, if not halted, for many people. So the biggest questions, which most of the CFOs were talking about, technology and access, now are more valid than ever. Challenges in accessing the data, challenges in the ability to access ERPs remotely, where you're outside the office and you need to prepare the returns. These are probably on CFO's top priority. The communication, the ability to communicate, review reports, submit reports, get access to data, get access to ERPs, make the necessary adjustments. And I'm always in the context of being remote and not available or not present at the office. All these are serious challenges now for the CFOs and their finance and tax functions around them. Unless you had some technological enablers within your function that facilitated the business slightly or substantially, depending on how advanced your tax function is. As a CFO, probably you lost a few hours of sleep trying to meet deadlines before these announcements from the governments that they relax the deadlines and they defer them or push them into the future. So taking a look at your tax operations and how resilient that to crises like the COVID-19 is essential now as a CFO or a head of tax.
When it comes to tax numbers, of course, a CFO, the expectation of a CFO is first to reduce the tax burden whenever possible. We have seen in our discussion so far that will probably, at least for the figures 2019, which are already set, be difficult because, the only thing we can achieve is managing the cash flow by extending deadlines and make sure that potential refunds are followed up as soon as possible and make sure that you will get them. But I think it's also very important to manage the expectation from CFOs because there will be taxes continue. There will be new taxes introduced, new rules, as we have seen at the beginning. And it's very much important that, that tax functions ensure that compliance is possible with those new rules. And this, of course, also links back to availability of data. For example, if you know already now that you will have quite a lot of doubtful debts, most likely in 2020, make sure that your documentation complies with the tax rules, that if possible, you can deduct those doubtful debts, and also make sure that the tax position so that you know what approximately the tax amount you will have to pay next year will be. Because again, the deadlines have only been extended, but at some extent the taxes will have to be paid.
Right, and I couldn't agree more. If I can take the liberty of saying this, for many businesses, the current crisis is very likely to have a direct impact on at least two tax periods. The one for which the compliances are about to get due, and the one which is in the making. And also based on where do the organizations see themselves in the overall sector value chain, the short-term and the long-term impact of your tax position, the ability with which you can make a tax call since the value chain is all interconnected and the documentations are codependent will surely vary. The government measures we discussed on tax compliances surely mean that in a way for this year, there's a rewritten compliance calendar. Suddenly today, if you look at June 2020, which otherwise is an ordinary month from a tax compliance perspective. It appears to be the epicenter of many revised tax due dates, which are going to soon pile up. As Barbara mentioned, be it bad debts, a sudden change in your taxable income number, any extraordinary business expenses which you have to deal with. All these mean that there's going to be a cascading impact without doubt on your tax positions, and there's no longer business as usual as far as tax functions are concerned. Having said that, if we look at it as an opportunity, without taking anything for granted, while tax tends to be a more of a consequential and a post facto event, we as tax professionals do have an opportunity to try and identify the areas wherein possibly the tax function could upscale itself in the decision chain, try and bring to table the tax perspectives, those issues from a tax vantage point, by preempting some of them in the live situation, while the businesses, the CFOs, are in a way in a crisis mode, business continuity planning. The tax ops perspective, the tax technology perspective, whether you're insourcing or leveraging on your tax network, your ability today as a tax function will truly be tested. But I'm positive that some of us can surely make the most of the opportunity and try and contribute to the overall CFO agenda.
Thanks a lot, Anuj. I'm sorry, everybody. I had some technical difficulties, and at a certain point of time, my internet stopped working. But I think that these are all kind of valuable insights that lead us to the next topic of the discussion. Because with increasing expectation from management, with the expectation from governments to collect the taxes, and with the difficulties that we're facing in performing the work, I think that managing tax authority risks is going to become a more important kind of topic on the agenda of all the tax professionals involved. So could we perhaps go and take a look at what are the key points that my guests today would like to present to the wider audience?
Sure, Philip, and I can give a start. And I'm conscious that we're talking about risks, and at the same time we spoke about the government relief, since quite an antithesis to speak about both in the same breath. But the message we would like to draw here is you never tend to get something for nothing. The stimulus packages, be it fiscal or otherwise, are definitely a positive reflection of the enablers each governments are willing to create and help businesses ride out the storm. But once the dust settles, there's little doubt that all these stimulus packages would come with a lot of strict governance standards, whether it is regarding the conditions subject to which these tax reliefs have been availed. Many of those conditions are self-certified by the very tax professionals joining us on this webcast. This, combined with the other impacts on the tax function, as we just discussed, makes a compelling case for a pretty strict tax governance framework. Once the recovery happens and the dust settles, in a way, you should be in a position where we don't remember these crisis days for any bad tax decision. Now, on a related point, while the business continuity measures are being undertaken, and we all know these firsthand across the board, they do give very little time to reflect on the tax consequences in the real time. And nonetheless, the tax professionals, as tax professionals, we do need to manage these tax consequences in the near future. Many of the legal outcomes of this crisis management would have a tax element which would need to be addressed. An expert would need to look at the tax consequence, the tax documentation. What were the circumstantial reasons because of which a particular business or a legal decision was taken? How do we have a documentation trail so that tomorrow when we face the tax authorities, in all might and right, we can defend the position because of the quality of the documentation trail and come out in the open as clear winners. So it's a good opportunity for the tax function to try and upscale themselves and take charge of the tax health of their organization.
Mohammed, what are the 2 points that you would like to draw in terms of managing tax authority risk? What would you highlight? Mohammed, if my internet did not die again.
No, sorry, I
You're on
was
mute.
on mute.
Oh,
Apologies.
okay.
Yes. I was saying that tax functions remain open, that tax authorities and tax departments remain operational. Very fresh announcement about that validates this, that today the Saudi tax authority, they updated their IRAD system where businesses can continue business as usual, submit their returns without any penalties. They are responding to queries and emails, maybe at not at the full speed that it used to be, but they are there and they are making sure that tax operations are running. I would like also to highlight the amnesty program in Saudi. This is a great tool and a great initiative by the tax authority for businesses who have potential provisions or assessments that they might be penalized. They might be out of some cash because of the penalty due to some gray area or late returns or wrong registration. Now is the right time to look back, assess what possibly can be fixed, what can be amended, what can be re-registered or registered to begin with, and do so within June 30 and pay the additional tax or ask for those to be installed on or before June 30, and will be saving a lot of money in penalties for businesses. I would encourage everybody to make a use or at least assess whether this is something beneficial for them or not.
I mean, from my perspective, this is an amazing tool that this amnesty program it is. KSA has been, as usual, the kind of leader in implementing these new regulations. Barbara, what do you think? Will Qatar follow this model?
I don't know. So far we have not yet heard anything. I also think it would be a very, very good model because one, as mentioned earlier, one of the key focus of the tax authorities in Qatar is to increase compliance. And I think this is really something which would give a big push for companies to be compliant if they have such a possibility. I think even without this tool, I think it's extremely important that companies in Qatar do not lose the focus for taxes. It's very easy to understand that at the moment, companies have other risks, and taxes are no longer in the main focus. Nevertheless, the tax authorities, they will continue. So as I mentioned at the beginning, transfer pricing will come very soon. And also we see a lot of other new developments. So if companies are too relaxed now, I see a big danger in that in the future they will risk to have a lot of penalties and issues. And one other thing I would like to mention that most of the courts, they have stopped working. Also here in Qatar, we have just received a message today actually that the appeal committee will no longer have any meetings before end of April. And this means that all the cases are actually piling up. And already now, when a case was ended at a court or also at the appeal committee, the outcome was very, very hard to predict. So in my view, it became more important than ever that the companies really know about their tax position, that they do health check, that they know where they have risks. Because as soon as they have to go to court, the outcome is more uncertain than ever. And I think this is really a big risk in my view.
Yes, the pileup of documentation that will occur will make it more difficult.
One thing to add from my end, sorry, Philip, sorry to interrupt. One thing to add is, as Anuj mentioned, you won't get anything for nothing. So easing the deadlines and relaxing, waiving the penalties and relaxing the filing. Eventually, there's a window for that. When this window closed, like any other tax authority, our tax authorities will go back to their audits. Anticipation would be, or that they will be a bit more aggressive to justify the window that was given to businesses to file all the issues in their files and benefit from no penalties. So audits might be more frequent. Also, as we know, Gazette is moving into data-driven, and they're asking responses to audits within 24 or 48 hours. So this can be an issue when audits start, frequency of the audits start. This can be an issue for businesses. So again, just to reiterate, if it would be beneficial for businesses to assess whether this amnesty is a good step for them or not.
Thanks a lot, Mohammed. Now, I'm conscious of time, so we're going to go over to the questions. And I'm going to kick off this kind of discussion first by telling you now is the time to ask questions if you didn't do it so far. But I had a couple of questions for Anuj. Is there any news from the FTA in respect to the deadline for VAT submissions?
Right. So so far, it's only on excise that the timelines have been revised, which means for VAT, it's still business as usual. We are keeping a keen eye. Of course, there is some expectation given the flavor we are watching on various compliance due dates. But till the time we don't hear anything formal, we are assisting our clients to do as much as possible to get close to the original timelines.
Okay. And the related question that I got is for Barbara and Qatar. Do we have any news on what is happening in the VAT kind of sphere?
I was expecting this question because I cannot really answer it. If you would have asked me some time ago, I would have told you that I really expect something to happen very soon, meaning before or after Ramadan. Now I feel because of the situation we have currently, the implementation of VAT in Qatar has moved further away. I don't think that it is longer, likely that it will come 1st of January 2021. So I personally think that it's more and more likely that it's pushed quite a bit further back. But that's really my personal opinion.
Okay, and Anuj, back to you. I had an interesting question here. In addition to the one discussed, are there any other regulatory developments in the UAE which we and our clients should keep an eye on?
Well, yes. So I can surely consider the FDI efforts of the government to be an interesting development to keep an eye on. I know it's been kind of in the shadow of press releases, some documents coming out, but we're seeing more and more structure being formed around it. And also in these times, again, when things return to normal, attraction of foreign capital, giving more and more muscle to the competitive advantage of UAE, one would expect the FDI regulations to take some more formal shape. So I would encourage businesses to test whether there is anything in it for them, and then accordingly plan the next move on their ownership structure.
And Mohammed, the amnesty has been making a lot of tractions with our attendees. So could you kind of give a brief overview of whether you think are the steps to be taken, and perhaps share, because I know that you will be doing a specific webinar on this topic. Am I correct?
Yeah, actually, we're having a tax webinar about Saudi reform practices in response to the COVID and the stimulus package. And we will be going in those in details. If anybody is interested, or we actually might as well just distribute the invite to everybody on this WebEx. I'll share the invite with you, Philip, and then we can distribute that. But no doubt the amnesty got everybody's attention. As many people know, Gazette is one of the most strict tax authorities in the region, and they have severe penalties on the various failures to comply. Failures to comply meaning failure to register or pay late payment or late filing and things like this. And these penalties can add substantially. In an effort to increase the inflow of tax revenue, Gazette said for everybody who's hesitating on coming forward or correcting a tax error, whether on a return or in a disclosure and a shareholder listing or something like that. We're going to waive all penalties, fair and square. You pay whatever you were supposed to pay, and we'll call it a day. So for businesses to benefit from this, I guess CFOs and heads of tax need to take some time out and then think about all their tax position, their tax decisions that they have taken, and whether some of those decisions were risky, whether they were tight on a deadline and they submitted a return uh, that's not properly reviewed, but it was submitted so they don't miss the deadline and get penalized. Now is the time to go and review those tax returns, regardless of the nature of the tax, VAT, withholding, customs, income tax. And if there's a need to amend and resubmit those returns and waive any penalties and pay whatever tax was initially due or was due, this would be a good to run that assessment and quantify the volume or the amount of the risk or the potential risk and make a decision whether to benefit from this amnesty or not.
Okay, and I had a question here, which is talking about waiving of tax liabilities in case that this COVID situation continues. Just a kind of brief perspective from all of three of you. Do you think that it's likely or that these deferrals are so far the best that we got?
Maybe I can start. I personally think that, sorry for that. I don't believe in a waiver at all. I think it's, everything, it's already a lot what actually Saudi did to waive potential penalties, but I don't believe that any tax liabilities will be waived.
What about you?
I don't.
Yeah, I would maybe second that, and I guess maybe it's one day at a time approach. We know that the authorities have been responsive enough and reactive enough. It's one step at a time. I would expect, again, if I draw inferences from what's happening in the larger context worldwide, there will be some relaxations, probably a more likely scenario of certain conditions which are linked to maybe the administrative inconvenience caused of people working from home, etc., etc. Some more leeways given on or a wider time frame given to compliances. But I think looking at waivers at this stage would be a bit of a premature thinking. That would definitely require some more bit of soul searching even from the tax authority side.
Thanks, Anush. Mohammed, your view?
I don't see or I don't expect a waiver of taxes because there are a lot of factors we have to keep in mind. We didn't mention it.
I think that I lost Mohammed.
That are the money from one end, so I don't think they will double down on that and waive taxes. But in the same token, they have pushed the deadlines. They have expedited refunds. So if the government owes you money, they enhance your cash flow, and more importantly, they're accepting installments without down payments. So normally, if you reach a settlement, if there's a tax bill, you'd say, okay, I owe you 1,000 riyals. I cannot afford it. Now they say, okay, fine, pay us 400, pay us 300, pay a certain amount, and then we'll install the rest. Now they have relaxed that and they said, okay, agree on an installment without the down payment. So that's also a good measure by Gazette. So I highly doubt to see taxes waived anywhere actually, let alone in the region. So it's good people understand the stimulus packages around them and how they can benefit from them as a business, and also to assess what benefits are available from a tax authority and assess also whether they can benefit from those too.
Okay, thank you very much. Now, that said, I would, conscious of time, I would like to thank everybody, Barbara, Anush, Mohammed, for giving us this valuable insights. I would like to thank all of you for attending this webcast, and I hope that we have provided you with some insights. I see that there are a couple of questions that we didn't answer. Some of them were related to employees and kind of personal situations. And I'm happy to say that in one of the next webcasts, we will be covering these topics as well. So that you know,
this is something we're covering tomorrow in our WebEx in Saudi. So as tax risks.
so we will make sure that we also share the KSA invite for the local Kingdom of Saudi Arabia webcast, because I see that this is of much interest to you all. So that you know, next week we're going to be focused on international tax, substance, and transfer pricing issues. So with this, I would like to thank everybody for attending. I hope that you stay well. I hope that you stay home, and I hope that you stay safe. Until next week.
Thank you and bye.
Thank you, everybody.